Welcome to the Understanding the 1040 module. In this session, we're breaking down the 1040 so you'll know how to read it and how to explain it to your clients. Today we'll cover its purpose, each section of the form, and finish with a clear wrap-up. When we talk about the 1040, think of it as the IRS's report card for your client's financial year. Every single taxpayer in the U.S. files one, either by themselves or through a preparer like us. The purpose of this form is simple. It's how the IRS does the math. It takes all the income a client made, subtracts deductions, applies credits, and then comes up with the final number. At the bottom, the 1040 answers the big question. Does this person owe, or are they getting money back? Here's what's key for you as a tax pro. Every other form, like a W-2, a 1099, retirement forms, or business schedules, they all feed into this one form. The 1040 is the hub. Once you learn how to read it, you can always explain the big picture to a client no matter how many papers they bring you. Most clients only care about two things. Am I getting a refund? Or do I owe? Your job is to help them understand why. That's where the 1040 comes in. It's not random and it's not scary. It's just the IRS's way of totaling up the year. If you see the 1040 as a summary page, you'll be more confident. As long as you know where the numbers came from, you'll always be able to explain it in plain language. And that's what builds trust with your clients. Now, let's talk about why it's so important for you as a tax pro to understand the 1040 inside and out. First, being able to walk a client through their 1040 builds trust. When you can point to each section and explain what it means in plain language, clients feel like you're not just pushing buttons in software. You actually know the tax return. That kind of confidence makes people come back year after year. Second, it prevents confusion. One of the most common things clients ask is, why do I owe? If you don't know how to explain it, that client leaves your office frustrated. But if you can show them line by line how the IRS got that number, you've taken away the mystery. Third, it sets you apart. Anybody can plug numbers into TurboTax or another DIY program. But not everyone can explain the 1040. That's where your professionalism shows. When you explain their return clearly, you're proving that you bring something extra to the table: expertise, guidance, and peace of mind. And finally, it helps your clients understand their own money better. A client who knows how the 1040 works is a client who makes better financial decisions throughout the year. And guess who they're going to trust to guide them? You. So remember, your ability to explain the 1040 is what separates you from inexperienced preparers and from software. That knowledge doesn't just help you file returns. It builds your reputation as someone clients can rely on. Now we're about to break down this entire form section by section so you'll understand what you're looking at as well as how to explain it to your clients. Remember, you're the pro. The very first part of the 1040 is simple, but it's also one of the most important, the personal information section. If you get this wrong, it can delay the whole return. It starts with the name and social security number. These have to match exactly what's on file with the Social Security Administration. Even something as small as a missing hyphen or a name change that hasn't been updated can kick a return back. So always double-check spelling, double-check socials. Next is the address. This should be the taxpayer's current mailing address. Why does this matter? Because if the IRS needs to send out a letter or if the refund is being mailed instead of direct deposited, it's going to this address. If it's wrong, the client won't get important notices on time. Then you have filing status. This is where you mark whether they're single, married filing joint, married filing separate, head of household, or qualifying widow. Filing status is critical because it determines their tax bracket and whether they qualify for certain credits. For example, head of household usually gets a bigger standard deduction than single, which means lower taxable income. Next is the digital assets question. The IRS now asks if the taxpayer had any involvement with cryptocurrency, NFTs, or other virtual assets. Even if they just bought some crypto and held it, they have to answer. A lot of clients miss this, so always ask. Then we move into the standard deduction box. Most taxpayers will take the standard deduction because it's larger than itemizing for them. But make sure you check if they have special cases, like large medical bills or mortgage interest that might make itemizing worth it. Finally, the dependents section. This is where you list qualifying children or relatives. Each dependent needs a social security number and their relationship to the taxpayer. Dependents drive important credits, like the child tax credit and the earned income credit. If you miss someone here, you're literally leaving money on the table for your client. So, even though this section seems basic, it sets the tone for the rest of the return. Getting the personal information right prevents IRS delays, ensures credits are applied, and shows your client that you pay attention to detail. The next part of the 1040 is the income section. This is where the IRS wants to see every type of money that came in for the year. The first line is usually the most familiar to clients: wages, salaries, and tips. That's pulled straight from their W-2. If they worked more than one job, each W-2 adds up here. Always remind clients that the IRS already has a copy of their W-2s, so it's not optional. Everything has to be reported. Next, we have interest and dividends. Those come from 1099 INTs and 1099 DIVs. Even if it's just a few dollars of bank interest, it goes on the return. This is a great spot to remind clients that small amounts still count because the IRS is already tracking it. Then you'll see retirement income. That could be IRA distributions or pensions from a 1099-R and Social Security benefits from an SSA 1099. The key thing here is that sometimes only part of those benefits are taxable, and the 1040 breaks that out clearly. There's also a line for capital gains or losses. That usually comes from a 1099-B if a client sold stock, crypto, or real estate. Some clients get nervous about this line, but the best way to explain it is, if you sell something for more than you bought it, you might owe tax on the gain. If you sold at a loss, it might help offset other income. Next, we have business or self-employment income. This is where freelancers, gig workers, and small business owners report their earnings, usually through a Schedule C. The income will show up here after expenses are accounted for. Clients often confuse total money made with taxable income, so make sure you explain that deductions are applied on the schedule before it lands here. We also can't forget other income, things like unemployment compensation from a 1099-G, gambling winnings from a W-2G, or jury duty pay. These may not be as common, but they matter because they all funnel into this section. At the very bottom, you'll see total income. This number is huge because it's basically the IRS saying, this is everything we see that came in during the year. From there, adjustments and deductions will bring that number down, but this total is the starting point for the entire return. So when you explain the income section to clients, keep it simple. All money in gets reported here, no matter the source. Some of it is fully taxable, some partially, and some not at all, but it has to be listed so the IRS can do the math. When you're walking a client through the income section of the 1040, the most important thing is to keep it simple and relatable. Clients don't need IRS language. They need to understand the big picture of what this part means. Here's how you break it down. This section is just showing the IRS all the money you brought in this year. It doesn't matter where it came from: wages, unemployment, Social Security, side hustle, even gambling winnings, it all gets added up here. Then later, we'll subtract deductions and apply credits to lower what's taxable. Notice how that explanation uses plain language. No code words, no IRS terms like adjusted gross income right away. You're connecting with them in a way that makes sense. First, the IRS looks at taxable income. That's what's left after deductions are subtracted. Using the tax brackets, the IRS calculates how much tax is owed on that number. That's the starting point, what the IRS says the client should pay before we apply any credits. Next come the credits. This is where things start to feel good for the client, because credits directly reduce that tax owed. Unlike deductions, which just lower the amount of income being taxed, credits hit the tax bill head-on. There are two main types of credits. Non-refundable credits. These reduce tax but can't go below zero. For example, the child tax credit up to $1,500 is non-refundable. If your client owes $2,000 in tax and they get a $1,500 child tax credit, it drops the tax bill to $500. But if they only owed $1,000, the extra $500 doesn't turn into a refund. It just stops at zero. Refundable credits. These can actually create or increase a refund. Think about the earned income credit, the additional child tax credit, or the American Opportunity Credit for education. If the tax bill is zero and the client qualifies for these, the IRS will send that money back as part of their refund. Here's where your role is important. Clients don't care about the IRS definitions. They just want to know why they're getting a refund or why they owe. So, when you're explaining this section, use examples they relate to. If they have kids, talk about the child tax credit. If they're working a job, mention the earned income credit. If they're in school or paying for a child in school, point to education credits. The big takeaway you want them to hear is this: credits are the rewards section of your return. They shrink down what you owe, and some of them even put money back in your pocket. So in short, this section starts with the tax bill, then applies the credits that help reduce it. Your job is to show the client that this is where the IRS recognizes things like raising kids, working, or going to school, and gives them a break for it. This section of the 1040 is where everything comes together. We've gone through income, deductions, taxes, and credits. Now it's time to see the final outcome. First, we have payments. This includes any federal income tax that was already withheld from paychecks, reported on W-2s or 1099s. It also includes any estimated payments the client sent in during the year, plus refundable credits like the Earned Income Credit or the Additional Child Tax Credit. Think of this as the money already in column. Next comes the refund line. A refund happens when payments are more than the total tax owed. This doesn't mean the IRS is giving the client free money. It means the client overpaid during the year, and the IRS is returning the difference. This is a great teaching moment with clients. Make sure they understand refunds aren't bonuses, they're just money they already paid in. Refunds can be sent by direct deposit, which is always the fastest way. Clients can also split a refund into up to 3 accounts, or they can choose to roll part of it forward to cover next year's taxes. Then we move to the amount owed. If the client's payments are less than the tax owed, this line will show a balance due. It's not the end of the world. The IRS gives several options: pay in full, set up a payment plan, or mail in a payment. What's most important is paying attention to deadlines, because interest and penalties can start adding up quickly if it's ignored. Here's the client-friendly way to think about this section. It's just the math showing whether they paid too much or not enough during the year. That's it. Paid too much equals refund. Paid too little equals balance due. As a tax pro, this is one of the biggest opportunities to educate your clients. If they owe every year, maybe they need to adjust their withholding. If they get a big refund every year, maybe they're giving the IRS an interest-free loan. Either way, helping them understand this part makes you more than just a preparer, it makes you an advisor. So remember, this section doesn't just tell the client whether they're winning or losing. It tells the story of how their year lined up with what the IRS expected. And your job is to explain it calmly and clearly without judgment, so they walk away understanding their final result. The third-party designee section gives the taxpayer the option to authorize someone else, usually you as their tax preparer, to speak with the IRS about that specific tax return. This doesn't mean full representation. It just allows the IRS to contact you, the preparer, if there's a simple question about processing. Here's what the designee can do. Provide missing information if the IRS needs clarification. Check the status of a refund. Answer basic questions about the return. And here's what the designee cannot do. They cannot sign the return for the taxpayer. They cannot represent the taxpayer in an audit, appeal, or collection issue that requires a power of attorney form, specifically Form 2848. Another key point: this authorization only lasts for 1 year from the original due date of the return. After that, it expires automatically. When you're explaining this to clients, keep it simple. This just allows me to answer basic questions with the IRS on your behalf for this tax return. It does not give me the right to sign for you or handle an audit. It's only for simple things, and it only lasts for 1 year. That's it. It's a convenience option, not a replacement for legal representation. At the very bottom of the 1040, you'll find the signature section. This is where the taxpayer makes it official. First, the taxpayer's signature is required. By signing, they're confirming that all of the information on the return is true, correct, and complete to the best of their knowledge. It's not just a formality, it's a legal statement. If the return is joint, then the spouse's signature is also required. Both names have to be there or the IRS won't accept it. Next to the signature, the taxpayer needs to list the date and their occupation. Don't skip this. Missing information here can slow down processing. Then you'll see the Paid Preparer Use Only section. This is where you, as the preparer, sign the return. By signing, you're confirming that you exercised due diligence, that the numbers are accurate based on what the client provided, and that you've followed IRS rules. You'll also include your PTN, that's your Preparer Tax Identification Number, along with your firm's name, address, and contact information. This tells the IRS who prepared the return and holds us accountable for the work we do. It's important to remind your clients that both parties, the taxpayer and the preparer, share responsibility for the accuracy of the return. Your role is to prepare it correctly, but they're signing off that the information they provided is complete and truthful. So in short, this section makes the 1040 official. Without signatures, it's just a draft. With signatures, it becomes the legal tax return that the IRS accepts. Now that we've walked through the 1040 section by section, let's step back and look at the big picture. The 1040 is the main tax form every individual taxpayer files. Everything else, W-2s, 1099s, retirement forms, business schedules, all flow into this one document. That's why it's so important for you as a tax pro to understand it inside and out. Here's the flow to remember. It starts with income, all the money the client earned during the year. Then we subtract adjustments and deductions to reduce taxable income. Next, the IRS figures the tax owed based on that income. From there, credits are applied to bring that tax bill down and in some cases, even create a refund. Finally, the form compares tax owed to payments already made through withholding, estimated payments, or refundable credits. The result is either a refund or an amount owed. That's really all the 1040 is. It's just the IRS's way of doing the final math for the year. As a tax pro, your job is not only to get these numbers right, but also to be able to explain them in plain language. When a client asks, "Why do I owe?" or "How did I get this refund?" you should be able to confidently point to the 1040 and walk them through it line by line. That confidence is what builds trust and keeps clients coming back to you. So here's the takeaway. The 1040 is not complicated once you understand the flow. Income, deductions, credits, payments, and then the final result. If you can master explaining that, you've already set yourself apart from software and inexperienced preparers. And that's the goal, not just preparing taxes, but guiding clients through their return so they feel informed, confident, and cared for.